Hey guys, it's Simon. Welcome. It's 6:20 p.m. on the 25th of January. What a day it's been. We had a really unique piece of price action today in the markets. And what that was, which was very interesting, was that the markets actually spent, let me jump over to a chart, something that has not done in a long, long time. And what that is we spent the day, let's bust this down to a 5-minute chart so you can see. And it's been the first time, I think, in 3 weeks, if not more, where we spent the day in a very wide balance range. That is a 5-minute chart. And as you can see today, this is 24 hours. And you can see on the 24-hour chart, we rolled from 66.90 all the way down to 69.03 and all the way back to 69.43. That's not an error. That's a 100-point NQ range. So that causes problems for traders when we've been trading in a very subtle, small, tight range, right? What you'll see is we're in this huge volume point of control from an hourly is what that is. This is a massive, massive point of control that we're just trading through, and it becomes very slippery when we are in these areas, right? So this 69.7350 has been consistent resistance so far up here. You'll look for a breakout above 69.73, which we need about another 30 points from where we're trading right now to get that break to the upside. So why is this more difficult? Well, let me show you why. And before I get started on this, let me pop this up really quick. Past performance is not indicative of future results, right? This is for educational purposes. What I'm doing is I'm sharing my 20 years of trading experience with you in hopes that it'll make you a better trader. My goal is to get traders from struggling or boom bust break-even traders to consistently winning traders. That's my goal, is both being in the room and as a one-on-one trading coach. That is what I am very good at, is getting guys from stopping to be boom bust traders and getting them to be consistent. And I get a lot of reward out of doing that outside of my own trading, right? So let's move forward. Why is that important? So let me show you. First, let's change this to daily, right? Really quick, get rid of the evening session. Let's clean the chart. Clean the chart. And there we are. Let's erase all lines. So that's a daytime chart. And what you will see on that daytime chart, I'm going to do this slowly so everyone can see what is going on. As I consolidate this, what you see is we've gone through a period starting back in late December. See how there's just not very much wide range? We had a down day here and there, and we had a down move here and there. But for the most part, we have not had days where there's wide range over each day and they cover 100 points. Most of the days, if we go and look in specific areas, and I'm going to just widen this out, right? Most days have involved, we go back a couple of weeks ago to like January 18th, right? We start off we end up with a true trend day down. Great example of that would be the 16th, where we popped up, we failed, and we went down. But notice, even this was relatively easier to trade because we just simply couldn't break the prior swing high, and we kept rolling lower, right? And then when we opened up the next day, we pushed down, and you'll notice that we just had these nice, gentle curves, and we didn't break the prior swing low. Okay, fast forward. So this is what traders got used to, and it became very, very easy. Very easy to trade this for most retail traders. They like trades like this. They like buying the rotation. You don't get shaken down. Your total rotation size here from swing high to swing low, you're talking about a move from 67.93 to 67.79, 13 NQ points, right? So fast forward. Why does that change? Why are you wondering, if you've started to lose a lot of money, why are you wondering what's happening here, right? Well, all of a sudden we've gone from 13-point rotations to rotations from 1616 to 1677, right? That is a 60-point rotation. If you're trading NQ, you just went from a risk rotation, 13 points, which is less than $300 per contract, to a rotation right through here. This is 60 points. This is $1,200 of, let me guess where it's going to reverse, right? And then if you looked, and then you think, I've got it. We're short now, right? Open drive lower. No. We're going to roll it from 69.20 all the way back up to 69.67. That's another $800 a contract. And then you think, I got it. I'm just going to be able to buy the retrace and push it. But no, then we roll from 69.67 all the way down to 69.01, right? So that's roughly a 70-point rotation or $1,400 a contract, right? And this is on a day. So what I'm trying to communicate is that the transition here, that the market's changed a little bit, right? And the transition here is now, hey, I can't buy every 10 or 13-point rotation down. Same thing with ES. We've expanded to 10 and 20 and 30-point rotations, right? So your risk control becomes more important. And if you can't identify where your key levels are, right, and what your entry looks like, your safe entry, right, your entry that gives you a clear entry, exit, stop, now you're in for an enormous amount of pain in your account. And this is exactly how accounts go through periods where they build an enormous amount of equity, and then they turn around and they boom, right? They boom up, and then they boom, the boom to the downside, which is the bust, right? Because they don't make the adjustment to the increased volatility, the increased ranges, and now this all of a sudden becomes a much harder trade to attack. Secondly, I want to point out very, very clearly, ES is easier to trade volatility-wise when volatility rises. NQ is easier to trade when there's low volatility. It provides greater risk-reward. It still provides a greater risk-reward, but the range is so wide, you have to be very skillful in the trading. Okay, let's shift gears, okay, and find out, well, how do you figure this out? So I'm going to show you how I teach my clients how to figure this out, and then go through a step-by-step trade and set it up for y'all, okay? So we're going to erase all lines. What we're going to do is go over to the TPO. And we are going to start from scratch. So what we're going to do is we're going to take this NQ chart. We could do ES, but we'll do NQ. Here's NQ. We're going to erase all lines. Start again. Okay. So coming into today, the way I attack the day is, first of all, I want to know where value area high is and value area low. You will notice that we spent the entire day, right? I don't need to know anything else, inside value area, right? So that's number one. Next are the points of control. I want to know where they are, right? And so fairly easily, I'm going to list them off. I want to know 44, and I want to know 33. And now I know why is that important information? Because I go over this in the morning. If I can hold over this point of control, and then I can consolidate above value area high, two things, right? So there's two pieces to that puzzle. I want to hold over value area high, and even if I test into the point of control, I want to get back above value area high, because then I can start to assume potential trend day up and push out. That is my first requirement, right, for getting a push to the upside, right? I also know that if I'm inside prior day's value area, I'm going to get chopped, and I'm probably going to get an open auction, right? And I'm probably going to be able to trade through that entire range because I can't get a directional move. Let me be clear. Two things required to get a directional move. First of all, we must be able to trade above prior day's high and prior day's low, but even more importantly, the early warning system for starting that out is I'm trading above and consolidating above value area high, or I'm trading below and consolidating below value area low. If you want a picture of what that looks like, just go back to the 23rd. It's perfect. You can see, right? You'll be able to see where we broke below value area low, and that opened us up to come back and test. And I refer to these as my neighborhoods. My neighborhoods help me out, right? Neighborhoods help me out. Neighborhoods help me out. I've got to get below the neighborhood. As long as I'm above the neighborhood will provide support for me. If I'm below the neighborhood, that neighborhood then becomes resistance. Wow, my computer just locked up. Give me just 1 second here. I do not know why it's locked, where my mouse is hidden to. Not a cool technical issue to have. There we go. So don't worry about it. Don't connect. I don't need you to connect right now. Here, disconnect. There we go. Really, thank you. So the point being is that when I'm inside value area, I expect wide rotations. I expect non-directional move, and I'm looking for key locations to trade up and down through that area. Where I really know we're in trouble, right? Potential setup is if we get below the point of control, both from the value, both from a TPO point of control or from a volume profile point of control. So now I have my key areas, right? I have prior days low, value area low, value area high, TPO points of control, right? Volume points of control and TPO points of control, and prior days high, right? So now I'm going to take this, right? Because I already have a trade plan. I know above, I'm looking to push out, to push higher. I know if we're trading below here that I have potential to push down. And I know inside here, I'm not making a commitment either way. Roll through this whole area. Okay, so now let's go to the concept. We're going to take this chart. We're going to duplicate it. We're now going to go to study settings, and we're going to get rid of remove. And we're going to go, okay, we're going to change this to candlesticks because I like candlesticks. And we're going to change this to a 5-minute chart. Okay, so now I have my day set up. I have a relatively pretty good knowledge of what I am looking to handle. So start the day. We open up and we immediately close below. This is the value area low, if you'll remember from just a minute ago. What does that tell me? So now I have an important piece of information. I know value area high in order to push out. I can kiss all my fantasies goodbye if I cannot trade about the rally to the upside, if I can't trade above value area high. Okay, number 2. There we go. Number 2, I'm now inside. Where's my likely target? Because I'm now underneath value area low. Boom. Right to my points of control. What do? We go right to the points of control. We're in the middle of a prior day's balance area. And what do we do around volume points of control? Usually people expect that they're always just going to fly out of there and reverse. This is actually very normal price behavior in a point of control, particularly when they're somewhat spread apart, is we'll kind of slam between these 2 points. Back to so what I'm looking for is my last best seller. I want to get above my last best seller in here. And then and now I know instead of buying this into a free fall, I can start to set up for a pushback out. Where do we remember? I'm inside value. Inside value, I do not expect directional move. I expect 2-sided rotational move. If you get bearish down here, you get smoked. If you get bullish up here, a lot of people try to buy the open, right? Nothing wrong with buying that open. You just should have known. As soon as we were back inside value, cut it, kill it. You're toast. Wait till it gets back above and reset the trade. It's the best way to manage risk that I know of, right? So continue rolling through that process, right? You get to value area high. You think, oh, I'm going to break out. Again, this is where all the retail traders pour in. This is where they're all smoked. If I could show you a delta chart that I'm not going to go into, you could see that happening very much in real time, right? We definitely were looking for a short at the 69.60. We just couldn't get it. But we had a short actually set up at 69.61 or 69.62. Obviously no fill on that, but that was perfectly timed, right? Failure right at value area high. Next test into the point of control. We get a smaller bounce, right? So notice lower high, higher low. Why? We're chopping, right? There's nowhere to go in particular. Now, value area low, 66.99. I know that in order to break down, I got to get below. Notice that all of a sudden the bars get big. Everyone panics. We're below the opening first hour low. Everyone starts to think, hey, we're going to fall apart. You get this whole big nasty series of sellers that last for about 45 minutes, right? What is this? You are now trapping shorts right here. If you look, this is what the process of trapping shorts looks like. What are they unable to do? They pushed really hard. They were unable to get below prior day's low. That's the key, right? So next, what's my challenge? Where do they not want this, right? And what you will see is we broke the first hour low over here to the right. We trapped back in. We backside test. We backside tested my best last seller. We pushed back to 69.33 from 69.15. This is a sweet trade at the end of the day, right? We actually had 69.03 labeled. I did not take it. It was too late in the afternoon. But I really wanted 69.03 long. And, of course, now I'm regretting it because we're trading at 69.43 as 69.44 as we speak, right? So this is a perfect picture of traders way too eager in the morning, right? They were buying up at 69.90, all of them trapped. We're now trapped back into prior day's range and back underneath value area low. We come test the point of control. We chop the daylights out of people who are trying to figure out the long and the short. We finally impulse move above, come back for one more test. Test value area high again. We're still inside range. Suck all the buyers in. Come back to the mid. Suck some more buyers in. Take it back to value area low where we find responsive buyers. Trap back inside. First hour low. Squeeze the shorts back up. Then after hours, we had good earnings, and they've pushed as high as 69.46. And my guess is if we can consolidate above 69, 65, 75 tomorrow, and we can hold above this time, right? So it'd be nice to get a test of 69.90, maybe a test back to 69.65 for a 30-point rotation, right? So you got to be able to visualize it, right? We push overnight. They all get exuberant. This time we make a mad dash back into value area low because everyone's going to try for the repeat tomorrow of getting them trapped back down. They get trapped, and then we just jam them all to the upside for a retest of 7K. And then if you look, we've been having 100-point ranges. So if we can hold above this 69.70, realistically, we could hit 79.50 to 79.70 on the upside if all that occurs. The flip side of that is if we get below today's value area low and we break today's low, which is a 69.89, we consolidate down here, I'm going to be highly aware and look for entries for a push to the short side because my support's actually quite a bit of ways underneath there, and that would make a nice short trade. But I'm not bearish. I am looking for rotations down to get moves to the long side primarily. So that is how I do that. That is how I figure out. I come in on the day, right, and I go from this chart, right? I start off with, in all my markets, right? I start off with this chart, right? Well, I guess it's underneath here. There we go. I start off with this chart right here, and I know where value area high is, value area low, and my points of control, right? Then I'm going to go to intraday, and I'm going to watch the price action against these key areas. And once I'm in these key areas, and I have a pretty good idea because I've studied for a long time, 20 years, right? And I have a pretty good idea of what the behavior looks like in those areas. So then I'm going to turn that around, and I'm going to go from this chart, right? And I'm going to flip back over here to this chart. And now I'm going to look at the price action. I'm going to look at the market deltas as we're trading around. I'm going to look I'm not buying free falls. I'm looking to get above my last best buyers and sellers. And that trade works often enough. I'll grant you, I do miss trades on occasion. But that trade works often enough with relatively little heat for me that I can make plenty of money, put it in the pocket for both myself and members in the room, and roll on to the next day. I do not want to leave the false impression. We do lose money, as every good trader loses money. But our net win ratio is very high, and we do very well over the short term, intermediate term, and long term. And it's very rewarding to help people be able to do that. Okay, so that covers it for tonight. Specifically, I thought that I'm looking for locations where we can get sellers trapped, late sellers trapped for pushes back up. I expect this price action in here to last this entire year. I will be hunting this. I have enough arrows on here. Looks like there was some kind of fight. All right, let's get rid of all that. So I do expect consistent pushes back up from rotations down, but you have to be very keenly aware of how big these rotations are and what your reversal patterns look like so you don't get smoked and lose a boatload of money entering early, right? And I'll give you, before I leave, I'll give you an example of that. Let's say you go and go, hey, gap fill works. I'll take that. Well, technically gap fill did work, right? But look at your stop on that trade, 69.32 to 69.15. This is $300. This is a $300 a contract move, and let me tell you why that's important. Because that same gap fill over here yesterday, let me pull back over here, right? The same trader over here, right? He's playing the gap fill, gets that trade yesterday, right? But as the market progresses, eventually, so this is the early stages of the rally, the gap fill will work, but eventually that move will become this move. So we'll go from this to this. You better be very damn sure when you're taking this trade that you know exactly what your reversal looks like and what your risk tolerance is, because had this move occurred over here and you bought the open gap, right, as it slipped this gap, this is a move, if you don't watch your P&L, right, before you get a sustainable, tradable counter rotation, this comes, by my eyesight, right, you move from 69.70 all the way down to 69.20. That's $1,000 a contract, right? So do not rely on those open gaps to work. Know what your trades look like. And generally, to avoid these situations, and the situation that we had this morning where we swept large areas, I basically choose to skip the first half hour. That keeps me, and even the first hour, and that keeps me out of most of the mess and still sets me up with plenty of good trades. So I appreciate you guys joining tonight. If you liked the video, please hit the like button. If you'd like to visit our room, send me an email, TRADEN as in Nancy, perform@gmail.com. I'm happy to extend a 5-day pass. And I'm pretty upfront. The room's $95 a month, and I think it's the best value out there. So that includes the chat room, the community, and the intraday coaching sessions that I do. So anyways, have a wonderful night, guys. I hope you all killed it, right? Have a risk management plan. You cannot make a lot of money if you do not have money to make that money with. You have to protect your downside and know what your winning trades look like consistently. I'll be back tomorrow morning with the live market preview. Talk to you later, guys.